This video is a replay of a trade I took today. Now, it probably goes without saying, but I'll say it anyway. I am not a financial advisor, and trading entails risk. Just because I got these results today doesn't mean that I can get these every day, nor that you can. Remember, the entire premise of the investing project and the $1 million experiment is that I am not an expert, and yet I am learning how to do this. So for heaven's sake, don't just blindly copy me. Instead, find a mentor, someone who is an expert, and join their community. Pay for their mentorship. This approach has worked very well for me, and it likely will for you too. So use this video partly as education and partly as inspiration. After all, if I can learn this, you can too.
Okay, so a slightly better day today. I've had three pretty substantial negative days in a row. The first two were news bars. They weren't really my fault, but the fact of the matter is they were still losses. And then yesterday was certainly my fault. I just didn't make some good decisions. So I was a bit more determined to be careful today, and I decided to get in short here. Really, the entry for this short should have been up here around 76, maybe 12 or 13 or 14, like around here. And I was quite late. I got in at 76.05, but I was late a little bit on purpose because what I really wanted to do was make sure that the Nasdaq was also selling off, and I really wanted to make sure it was not looking like it was encountering any support particularly before I got in here. And even then, it it bounced a bit and worried me kind of. But anyway, let's go ahead and play this here. I got in at 6:48, so 18 minutes after market open here. And I took this trade. What was I saying? This was a 15. What am I doing here? This was, oh, you know what? I just put the wrong trade on. Hang on a second. Hang on a second. Hang on a second. What I was doing was I was going short, and I just did a long. So let me put this in here properly. 76.05. So let's try that again. All right, 76.05. And then I had to expand this a bit to give myself a little bit of extra breathing room. So I took on 25 handles of risk again, just like yesterday, on 3 contracts of the ES. So the size of the risk was pretty much okay-ish, maybe a little bit larger than I should have taken, but it was approximately right. And so we've got this 2 contracts. Now, what I ended up doing here was I put 2 contracts. I decided to take 2 contracts just before it got to the pre-market low, the PML here, and then I left the final contract further down. And I did that because I figured there's probably going to be some support here. This is why this was a pre-market low. So I ended up taking, and so I wanted to make sure I actually captured something down here. So that is 2 contracts at 20 points. So that would have been $200 right here. So and so in the meanwhile, it didn't go straight there, of course. It actually came back up here, and it did what I was a little bit worried about. The Nasdaq had sold down to its pre-market low and bounced, which is exactly what I was expecting to happen here. So this bounced a bit, and when this bounced, the S&P bounced too. The main difference is I was expecting, if you look at the way the Nasdaq looks right now, I was expecting it to sell off more. It looked more bearish than the S&P did, and but I felt that it was likely the S&P would follow suit. But of course, if the Nasdaq rebounds substantially, then the S&P is not gonna. This isn't gonna work. But I was in the trade by this point, and so I left it alone, and it made its way all the way back up here to the same level. Now, this is actually a significant level. If you look over here, you can see the this level up here where it's high of day. You can see that it was hit previously here, and it was a significant level. And so and it came back and it hit that again. And I thought, it tagged it here. It's coming back. I figured it's a significant level. So let's just let this play out here. It was what gave me the confidence to get back in there. We know that at least at one time recently there were sellers above that level. And we know that's true because otherwise it would have gone higher. But it didn't. So the question is, are those sellers still there? Because if they aren't, this is going to trigger my stop, and I'm going to be out for, a $345 loss, which isn't great, but anyway, it is what it is. But that's not what happened. It danced around in here for a little bit. I think it ended up coming up even a little bit higher, if I remember correctly. It'd be nice if this played back at even higher speed. I think around this point is where I said, look, this is whatever happens, happens at this point. Okay, so here we are. It did come up there. It did pretty much match the level that it was at previously, and it continued to sell off. So the sellers are indeed still there. And if you look at the Nasdaq, it had run into its resistance, so it had bounced a little bit, and it was heading back down again. So this took a while to play out, and in fact, it may have taken a couple of hours to play out. I think it was around this time. What time is it here? 7:20. So I stuck around for another maybe 10 minutes or so. But then I said, okay, I got some errands to run. So I actually had the targets where I wanted them. I had the stop where it was appropriate, and I just went out and went about my errands. And I came back to it being somewhat positive. Now, if this goes forward a few hours, or a couple of hours, I'll show you. But basically, what I ended up happening is this moved back down into profitable territory. The Nasdaq continued to sell off, which was helpful. And once this made it soundly into profitable territory, I ended up following the stop down. And I did this manually since once I got back from my errands and saw where it was, I ended up following the stop down manually, and it actually worked rather well. I ended up collecting my 20 points here on the first target, and then following the stop all the way down with a stop behind the 5-minute bar pretty much all the way until it was down. And it didn't ever trigger my second target, but I did end up being taken out for, let's see, I think the first one was the $200. I think I ended up getting, what was the total here? 345. So I ended up getting another $145. So I collected the $200 here, and then I made another 145 after that. So this would have gone another 45 points below this level, which ended up stopping me out as I was trailing it. And that actually worked. I'm going to let this play because I want to show you that, because it was really that moment that stopped me out, that triggered a big rebound. And that's when I got into my second trade on this time on the YM. And I'll show you that when we get there. But that was actually at 9:55 a.m. So, a lot of time had gone by. I'd gone about my day, and I just happened to check back. And right now it's 7:36. So, I'm just going to let this. I'm going to let this run, because really, you kind of we want to see it. So you can fast forward past this if you want. I won't narrate all of it. When it gets to the point where it's following the stop down, that's the part that's interesting. At least seeing it eventually trigger that stop, and then the big turnaround. Because that's something that you can actually use to understand what that rebound starts to look like. So I'm going to stop talking here and just let this do its thing. Yeah, sometimes it's a lot like watching paint dry. That's one of the reasons why. And funny enough, I said I was going to talk throughout this, but I am going to talk because if you're listening, I'll I'll share this. But it's one of the things that kept me away from day trading for a long time was the idea that I had to stay glued to my computer screen and that I would always be in some sort of high stress trade. And it turns out that the truth is not like that. And that's not really how I'm trading at all. I stay glued to my computer screen for the first hour maybe, and even then, not necessarily. Because once I've got a good trade and I'm in it, I actually get up and leave the room and do other stuff. Because I just find I tend not to tinker with my trades that way. Because whenever I tinker with them, I make them worse, not better. So so there's that. Um, but it's also the fact that uh, you know I would never want to be sitting here doing nothing but staring at this. That just seems appalling. I would never do that. And the reality is I don't do that. For the vast majority of the time, I'm out within the first hour, hour and a half at the most. And that's really my choice. I don't have to, I could choose to play trade the first half an hour or 45 minutes. And the key is that if I didn't see a trade setup that I liked, I wouldn't take anything. And that's actually probably a more profitable approach all in, because if you're seeing sketchier setups like I did yesterday, um, there's still an overwhelming temptation often to go ahead and take the trade, even though the chances of losing on that trade are a lot higher because it's kind of a sketchy trade. So you're better off to only take the trades setups that you really like. And if you're trading for a shorter window, you can still be picky. If you got a good setup that you like in the first 45 minutes, take it, great. And if you don't take it. Now you won't always be right, but the chances of being wrong greatly increase when the quality of the setup isn't great. So it's some sort of self-evident. But anyway, so I think it was around this. No, right now I'm in the midst of running my errands. If I'm looking at the timestamp of the replay, I'm in the midst of running my errands. I get back in about 45 minutes, 40 minutes from this point. So it's just taken a sweet long time to go through and run its course. Well, this is super exciting. Okay, I'm back at this point. I can tell that it's 8:52, so I would have been back in right around now. And I think looking at this, I would have said, okay, you know what? I am actually going to move my stop to even. Now, normally it moves to break even on its own when it gets to 15 handles, which it does shortly. But I would have moved it. I came in and I actually moved it to even because I figured, okay, this is this is taking a good long time, and the longer it takes, the more that there's a chance that it might just pop back up. And to be perfectly frank, I was looking at the NQ here. These are all 2-minute bars, and you can see as it's been getting lower, the volume has been dipping, has been diminishing, it's been getting smaller. And this is the ES itself, and you can see the volume has been getting smaller. And I was thinking, oh, maybe that's an indication, possibly, that it's going to go that's going to rebound. I was wrong about that. I misread that, and maybe it doesn't have anything to do with this, because at this point it actually does tend to turn around and sell off more. So I was looking at that. I was possibly going to make a decision that would have been completely wrong and very bad for this trade. So much for that idea. But in the meantime, I've just triggered my first target at 20 handles. So that is a $200 gain. So it's $100 each contract. And so now at this point, I'm certainly going to be following my the stop on the 15-minute. And I actually think that I changed right around here. I think I started to say, you know what, I am going to follow along the 5-minute because I don't want to give too much back. I don't want to think if well, I don't want to give too much back, but I want to give it enough room to run just in case it gets more. It gives me more. So I ended up. What did I get out? I can't quite remember here, but it was 45 points below the 75 at 85. It wasn't 45 points. It was $45, which is 9 points below the 75.85. So it would have been 76 that I got out. So I'm going to continue to follow this down just for the sake of it, and you can see what this looks like. As a matter of fact, let me zoom in. Is that visible? Yeah. All right. So I'm going to zoom in here so we can see this a little bit better. This comes up as a general rule. What I'm trying to do is follow along behind each of the 5-minute candles. Now, in this instance, I didn't follow it right behind this green one. I was following behind the red ones. Why exactly? I think at some point I actually moved this down here. I looked at the green one and I said, I'm going to put this stop right here, right above this green candle if it turns around. But I don't think it did at that point. I ended up getting down to 75. I think I said 86. Is that right? My math might be wrong. I'm just trying to figure out what time it was. It's getting up close to the time that I got stopped out. Maybe my math is wrong. So I think it was right around here. Yeah, here that I got taken out. And so if I look at my trade, yeah, it doesn't quite track. Oh yeah, it does. I guess it is. $345 is what I made. So yeah, and so right at that moment, right when I got taken out, suddenly there's this big spike upwards. And I'm going to pause this for a second because I'm about to get into my next trade. But there's this big spike upwards, and you can start to see that all of the indexes now, let me just zoom out, all of the indexes have bottomed, or so it seems. And I'll let this play again for a minute because I get in, it's 9:49, and I get in about 6 minutes from now on my next trade. So here I'm going to place this here now so I don't miss it. But I got in on the MYM at 770. So I would have been right. So is that right? Yeah, 790. Is that right? I can't read my own writing. I think it's 770. 770. So what in the world? So maybe it must come down further because I'm a little bit early yet. Let me remove that. Let's let it come down a little bit because I got in at 9:55. So Yeah. All right. You know what? It's 772. I got in at 770, so I must have come down a little bit. I don't want to miss it. So I'm going to put this in. Now, what I did here, not at 765, 770 there. So what I did here is I didn't, I, I, this could have been, I wasn't that confident in this. And so I did today the thing that I wished I'd done yesterday, which is this looks like a good setup. It's in a good location, but it's coming on the heels of a rather steep decline. And I don't know if this is enough of a base to feel confident that this is going to be a substantial bounce. So instead of not taking it, I'm taking it, but I'm taking it in a smaller size. So I'm willing to risk two contracts at 100 points, which is a total of $100. I'm willing to risk 100 of the 345 I just made on the chance that there's an opportunity to go higher. So I ended up getting into this trade at 9.55, which is right about now. Okay, so now I'm officially in it, and then the target. Where did I actually hit? Did I get a target? I think I got my. I actually don't remember where I took my target. I know what I ended up getting, which was 134 points. So what ended up happening with this is it ended up trailing. It ended up trailing my my stop, and as a result of that, it had gone up quite far. Once it goes up 100 points, it moves to break even, and then it trails 100 points behind. And what had happened is it went up, whatever it happened to be, 100 and I can't remember how many points. It went up a fair ways, and then I got taken out with the trailer. Or it might even have been, can't remember if I manually did this or not. Let's just let this play out. It'll occur to me. Interesting. There's the temptation, and I've had this temptation a number of times over the last while, and I'm fighting against it, which is as soon as it gets into profitable territory, to quickly move my stop to even in order to prevent a loss. Well, of course, the reality is it's not done baking yet, and so when I do that, it then comes down below where I would have been broken even. It would have taken me out of the trade and then made its move. And so, fortunately, I didn't do that. And that really comes from sizing this thing at a level where I don't really care very much. And I think that's actually a really important psychological thing. I don't care if I lose $100. I'm already $345 up. I'm not worried about losing $100. If I had made this with 6 contracts, I would have had a lot more temptation to move this to even earlier, and I'd have been taken out of the trade and not made any money at all. So, sizing it at a level where you're okay with it is actually really quite important. So I think I remember now what happened. So this started to move up, and I actually manually moved the stop tighter, and that ended up being a mistake because it ended up taking me up. So I think what I ended up doing is taking this and moving it up, probably to about here or so. Maybe I moved it a little further, and then this ran into some overhead resistance, came back, took me out. Which is where I made 134 points. So it took me out at a plus 134. So it probably took me out right around this level, right about here. I wouldn't have placed the trade yet. Obviously, this would be further up when I moved the stop, but it took me out at 134. So I think it might have been, if there was a little red candle, I probably put the stop right below that little red, more than likely. What's interesting here, and I'll leave this in just for fun. If I had left this alone and it just was trailing the way it normally does, 100 points behind, I probably would have been able to stay in all the way up and collect my full 200 points here. But yeah, so I know what I did now. I remember I put this stop right here below this red candle. I was just surmising that this was acting as support. And so I would have put it right here. And I think right around now, it turns around, comes back down, and clears anything that was cleared my stop here. So basically stopped me out right at this point and then continued upward, which is a tad unfortunate. Okay, so right here I would have been out. Now I don't quite remember. You know, it might actually be, I think it went higher, if I remember correctly. We'll find out in a second. Anyway. And so what I was doing in the meantime with the other one is I was trailing it behind the 15-minute. So with my other contract, I didn't want to give up too much, so I was trailing it behind the 15-minute here. Now let's see what's happening here. I really don't remember now whether this thing went higher. So I actually think that this, by this point, I think I was out. And in fact, what had happened is, yeah, I think I ran out of data here. Yeah, so I was out. So here's what happened. I basically had gone, I followed this this first one. I put the stop right here below this tiny red candle. I was stopped out at this point. Meanwhile, I was snugging this one up right behind the 5-minute candles at that point. And I think right around here is when it stopped down heavily and took me out. Long story short, I ended up making $127 on 2 contracts. So you know what? Better than a poke in the eye. It made the whole day a $472 day, which is, it's a positive day after 3 negative ones. So I'll take it one way or another and hopefully build on that tomorrow.